So this is test your knowledge questions on chapter number 8, that is refunds under customs. Explain the provisions of Customs Act relating to computation of limitation for submission of refund application. So what is the time limit within which the refund application should be made? In case of customs, it is 1 year from the relevant date, and that 1 year should be counted depending upon the situation. Suppose if it is on account of any provisional assessment or reassessment, so then in the case of the finalization of assessment or reassessment order, from that time 1 year. Suppose if it is on account of any judgment, decree or order, the date of the judgment, decree or order. If it is through a special order, so by way of exemption, so the date on which that order has been given, 1 year should be computed from the date of that order. Suppose if it is judgment, decree, etc., the date of the judgment or decree. Suppose if it is on account of final assessment, finalization of assessment, so 1 year should be counted from the date of adjustment of duty after final assessment. In any other case, the date of payment of duty. So this will be taken. But however, there is one proviso that this time limit is not applicable in case of duty paid under protest. For the duty paid under protest, this time limit is not applicable. Then next question. Question number 2. The assessee furnished bank guarantee to the department as required and imported capital goods at concessional rate of duty under an authorization with export obligation, but failed to complete the export obligation within the prescribed time. Consequently, department invoked the bank guarantee and realized the amount of duty foregone. Subsequently, assessee fulfilled the export obligation and the same was also accepted by the department. The assessee filed a refund claim for the amount realized by the department under the bank guarantee. So the department rejected the refund claim on the ground that it was time barred. So under section 27, so they are telling that the time limit of 1 year is over in this case. But there is one judgment in this regard, that is, so Oswald Agro Mills Limited case. Oswald Agro Mills Limited case, there is one Supreme Court judgment, and so the current question is J Raj Exports Private Limited, a Madras High Court. So the Madras High Court, relying upon the judgment given by Supreme Court, they are telling that whenever the recovery is made from the bank guarantee, which means that it is not customs duty paid. So only for customs duty paid, if you are getting the refund, the time limit of 1 year will be applicable. But in this case, it is like whatever money that has been paid is not customs duty. It has been recovered by the government from the security furnished in the form of bank guarantee. That cannot be equated to customs duty. And the period of limitation is not applicable in this case. So therefore, whether the contention of the department is correct? No, it is not correct. So furnishing of bank guarantee pursuant to an order of the court would not be equal to payment of excise duty. Actually, this question is like this case law is given in the context of excise duty, but the same is applicable even in the context of customs. Okay. So the Supreme Court case is in the context of excise duty. Therefore, the furnishing of bank guarantee is only security to safeguard the interest of the revenue. And since section 27 of Customs Act talks about the refund of duty and the bank guarantee is not duty, the limitation prescribed therein for refund of duty will not be applicable for refund of bank guarantee. Okay. So either you can write that Supreme Court judgment or you can write the High Court judgment, but my advice is that so you need to write the Supreme Court judgment, Oswald Agro Mills Limited case of Supreme Court. Then next question. Question number 3. Messrs. HIL imports copper concentrate from different suppliers. At the time of import, the seller issues a provisional invoice and the goods are provisionally assessed under section 18 of the Customs Act based on the invoice. When the final invoice is raised based on the price prevalent in the London Metal Exchange on a predetermined date, as agreed in the contract between the buyer and the seller, the assessments are finalized on the basis of the price on such invoices. Messrs. HIL has filed a refund claim arising on account of finalization of the bill of entry by the authorities. The department, however, has rejected the refund on the grounds of unjust enrichment. Discuss whether the action of the department is correct in law. So at the time when they are making the refund application, they need to prove that refund is subject to unjust enrichment. So that is even applicable in case of provisional assessment. As per section 28D, there is a reasonable presumption that any person who is claiming a refund, so he would have transferred the burden to the next person, so he need to submit the documentary evidences along with the refund claim. In the present case, as he did not give any documentary evidences, the department's action will be correct if they did not produce any evidence bearing burden of duty. Suppose if they produce the documentary evidence that the burden has not been transferred to the next person, then they are eligible for the refund of this amount. Okay, then next one, another question number 4. XYZ Limited imported capital goods and used them in its factory to produce goods for sale. Upon discovery of an error by which excess import duty has been paid on the said capital goods, it filed a claim for refund. As regards unjust enrichment, it contended that the capital goods were not sold, hence the principle of unjust enrichment will not apply. So they imported the capital goods and they used it in the factory. Okay, and that in any case the price of the finished goods manufactured in the factory remained the same before and after import and installation of the capital goods, which is sufficient proof to establish that duty burden has not been passed on. Examine the merits of these contentions with the supported case law, if any. So there is one case here, that is SRF Limited case. So it is a tribunal large bench case. So that is, it's like equal to High Court case. So what has happened is that the incidence of duty can be passed directly or indirectly. So here, when they imported the capital goods, on that whatever customs duty they paid in excess, so whether they have passed on or not, we need to check. So while doing the costing, if the capital goods depreciation is computed based on the excess customs duty, then also, so we have transferred the burden to the next person. Okay, so doctrine of unjust enrichment would be applicable in case imported capital goods used captively for manufacture of that goods. As regard the relevance of the fact that the price remained the same before and after the capital goods were imported, that uniformity does not lead to uniformity in price does not lead to inevitable conclusion that duty burden has not been passed. So they need to prove that the burden has not been passed. That uniformity in price may be because one raw material price would have come down and this depreciation on the capital goods would have increased. So because of that there could be a nullifying effect. So we cannot take that as the evidence here. So therefore they need to prove that they have not transferred the burden. So that is there always on the onus to prove is always on the importer. And what they can do, can they produce a CR CMA certificate in this regard? Yes, but mere declaration is not sufficient. So they need to prove that they have not transferred the burden to the next person. That is there. Then question number 5. Section 26A of Customs Act provides for refund of import duty paid if goods are found defective or not as per specifications. Discuss the conditions governing such refund in brief. So section 26A related information we need to write, that is when any imported goods are cleared for home consumption upon payment of customs duty. If the goods are found to be defective or not conforming to the specifications, then in that case 100% of the customs duty paid on such import can be claimed as refund under 26A if such imported goods are either exported or destroyed or abandoned or relinquishment of title has taken place. Okay, so then we will get, so that is either it is exported or relinquished or abandoned to the customs authorities. Abandoned to the customs authorities means relinquishment of title, or destroyed. So then refund is possible. And suppose if the goods are prohibited goods or perishable goods, then it is not applicable. Okay, so that is with respect to this 26A. And what is the time limit? The time limit for that is within 30 days from the date of import, within 30 days, or extended for a further period of 3 months, it should have been done. And after export or relinquishment or destruction within 6 months, an application should be made in the prescribed manner, and we should not have claimed any duty drawback. Then only section 26A benefit will be applicable. So those points related to 26A we need to write. Then what is the minimum monetary limit prescribed in the customs law for which no refund shall be granted? 100 rupees. 100 rupees. If the amount is less than 100 rupees, so then you will not get the refund. This is under section 27. So refund of customs duty paid. So but in duty drawback this amount has been given as 50 rupees. Then explain the doctrine of unjust enrichment with respect to refund of duty. So That is, whenever we are claiming the refund, we need to prove that we have not transferred the burden to the next person. So the duty incidence is not passed on to the next person, we need to prove. So that is known as doctrine of unjust enrichment. But there are some cases where doctrine of unjust enrichment is not applicable. So what are those cases? In case of duty drawback under 74 or 75, or any refund that we are claiming on account of export, section 26, refund of export duty, or imports by an individual for personal purpose, on the face of the bill of entry itself it is clearly evident that so we have paid excess customs duty, like that. In those cases no need to prove the doctrine of unjust enrichment. However, if an importer or exporter who is claiming refund fail to prove that doctrine of unjust enrichment, the amount will be credited to consumer welfare fund. Okay, so where any excess payment of duty, the refund is to be given only to the person who has borne the burden, and when the person who applies for the refund is not the person who has borne the burden of duty, the refund will be paid into consumer welfare fund. Also, as per section 28D, there is a reasonable presumption that always the person would have transferred the burden to the next person. Now he need to prove that he has not transferred. So that's the reason why along with refund application they need to give the entry evidences. Then question number 8. Acme sales imports were being provisionally assessed pending a verification that the department was carrying out. Upon completion of the verification, the assessments were finalized and the Acme sales was asked to pay 12 lakhs, which it paid. After 6 months, upon detailed scrutiny of verification report and taking legal opinion on it, Acme sales filed a claim for refund of 8 lakhs on the ground that differential amount should be 4 lakhs only, and there were factual errors in the verification report. Was this the correct mode of redressal of Acme sales? No. See, appeal we have to go, because already they have passed a final assessment order, and upon final assessment order we paid that amount. So thereafter, so we cannot go for refund. So because refund is not an alternative to appeal, so we should have made an appeal in this case. So this is one case law, Priya Blue Industries Limited Supreme Court case is there. So in that Priya Blue Industries Limited Supreme Court case, it is held that so refund is not an alternative to appeal. So whenever the finalization of assessment has happened, so they did not contest this order but made the payment and allowed the appeal period of 60 days to lapse, and after appeal became time barred, they are making a refund. So this is a backdoor method of seeking the relief against the order. So therefore this is not valid in law. Then next question, question number 9, a very interesting question. Mr. N has over 3 consignments of 200, 400 and 400 units, imported a total of 1000 units of an article ZDP, which has been valued at 1150 per unit. The customs duty on this article has been assessed at 250 per unit. He has his profit margin of 350 and sells the article for 1750. So what is happening here? So 1150 is the price assessable value and the customs duty 250. So 1150 plus 250. So that comes to 1400, and thereafter profit margin 350. So they are selling at 1750. And what they did, they imported 3 consignments of 200, 400 and 400. Now after 1 month of selling the entire consignment of article ZDP, Mr. N found that there had been an error in payment of amount of duty, in which duty for the consignment of 200 was paid as if it was 400 units. So therefore the first case 200, instead of taking it as 200, they took it as 400. So 400, 400, 400 they took. Actually it is 200, 200, 200 only. Now it is not 400, 400, 400. But they have paid customs duty taking the first consignment as 400 instead of 200 units. And but what they sold is only 200 units. They paid customs duty on 400 units, but what they sold is only 200 units, in which duty for the consignment 200 units was paid as if it was 400 units, resulting in excess payment of duty. Mr. N files an application for refund of 50,000. Why? Because on the 200 units into 250 rupees, so that is 50,000 rupees, they have got the, they have claimed the refund. Is the bar of unjust enrichment attracted? This is the case where there is an exception to the refund subject to unjust enrichment. What is that exception? Suppose if there is any excess payment of duty, and that excess payment of duty is evident in the bill of entry. Yes, in this case it is evident in the bill of entry that, so they are filing a bill of entry for 400 units, but actually consignment cleared is only 200 units with respect to first consignment. So clearly it is evident in the bill of entry that the excess payment of customs duty is there. In that case they don't have to prove the unjust enrichment. Okay, so that is this point. So there is one clause G of the exception which says that, so evident evident from the bill of entry that the amount paid was more than the amount of duty assessed. In that case, no need to prove unjust enrichment. Okay, so therefore it will fall within the exception to the unjust enrichment. So in that case, whether n should prove that, so there is like prove the unjust enrichment here, doctrine of unjust enrichment, no, not required. So which means that, so he will get the refund. Okay, so Mr. N's invoice will show how much duty he collected from his customer, since he may not be covered by this clause also to escape the bar of unjust enrichment. Okay, he will be able to refute the charge. Furthermore, clause A provides that doctrine of unjust enrichment will not apply to refund of duty, if any, paid on such duty if the amount is relatable to duty and interest paid by the importer, if he has not passed on the incidence of the duty to any other person. So he did not pass on the incidence. So anyway, if you see that he is not required to comply with the provisions of unjust enrichment. Then question number 10. Explain the relevant dates as provided in section 26A of Customs Act for the purpose of refund of duty under specified circumstances. So 26A, whenever we export, if the goods are exported, the date on which let export order is passed, from there that 30 days and 3 months should be counted. Relinquishment of title, the date of relinquishment. Goods destroyed or rendered valueless, the date on which it is destroyed. So the date on which proper officer makes order, if it is export. What is that order? Let export order. Okay, let export order, let export order. And in case of relinquishment, date of such relinquishment. Goods being destroyed or rendered valueless, date of such destruction or rendering of goods commercially valueless, that should be taken. So that date, from that date within 30 days, they need to from the date of import, they need to do this. And from this date, that is within 30 days from the date when they imported, they need to do this. It can be extended for a further period of 3 months. Once they do this, from this date, within 6 months, they can make an application for refund. Then question number 11. Explain briefly, refund of import duty is allowed in case of perishable goods as per section 26A. So refund of import duty is not applicable in case of perishable goods or goods which has exceeded its shelf life. So that is the answer. Briefly explain whether interest is paid to the applicant in case of delayed refund by customs authorities. If yes, also explain the period of computation of the interest. What is the period for which interest will be computed? Interest will be computed for a period of 3 months. Interest is not there. So when we make an application for refund, within 3 months, the refund should be granted. Within 3 months from the date of application, if the refund is not granted, on expiry of 3 months, the interest will be payable at the rate of 6% per annum till the date on which they are crediting the refund. Okay, so after 3 months only the interest rate. And what is the interest rate? 6% per annum. So these are the questions on refund under customs.